Hi everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Friday the 4th of November. Now markets have been spending the last few days reacting to a whole load of tier 1 data, massively focusing on the Fed though, and we're going to see how that has impacted the likes of sterling dollar today. We're going to look at the oil price, which is driving higher, and also an interesting rally on FTSE 100. But starting off with this sterling dollar cable chart, which sterling has had a big fall. It had the Bank of England as well yesterday, a slightly cautious hike, you could argue, and that hit that cable price lower with the dollar strengthening as well on the back of the Fed. Now, I believe that has now decisively shifted the outlook. I talked previously about this breakout area. The breakout that we saw a week and a half ago above the resistance at 115 was a crucial level because it held that breakout for a while and then started to lose the support a little bit, and then breaking down. I'm taking the fact that the market's moved below 1380 as a decisive change and a decisive shift in the outlook. That was a recovery. That recovery trend has now been broken. It's now turned into more of a corrective outlook. We can see that RSI back underneath 50. If I go on the 4-hour chart, we can see that the 4-hour RSI got underneath 30. So that's a growing corrective momentum. It's ticked higher this morning, a slight move higher, but now the key question will be, how do markets respond to this move higher? There is overhead supply now on a near-term basis. If I get the crosshair, the overhead supply starts to come in around 112.60 area, and again up towards 113.80. So 1260 to 1380, that's key resistance. You can see where these moving averages start to come in. That's also where the old uptrend resistance is coming in as well. So is this going to now start to form lower highs and lower lows? It looks like it's a more corrective configuration on the RSI on the 4-hour chart there. So I'm looking at the prospect of testing the supports now. 110.60 comes in as the first line of support, but the big support remains the 109.30, 109.20 area. That is the key higher reaction low of the recovery, and that really is the moment that we would see where the outlook is for cable moving forward. But just for now, I think it's a corrective move back towards these supports, but do those supports then start to break down is the question. As I said, overhead supply coming in 112.60 to 113.80, looking at corrective near term. Onto this oil chart. Well, we've had an interesting rally in oil, despite the fact that all these central banks are hiking rates into what looks to be recessionary conditions for the global economy. The oil price seems to be moving higher still, and it has, on a technical basis, certainly is becoming increasingly positive. You can see this RSI holding above 50 now on the daily chart, holding this uptrend. It's trading above moving averages. This is the 55-day moving average starting to turn higher. So it suggests that at the very least it's a neutral outlook, but possibly turning positive. If we can get above 99.50, that reaction high back from early October, that would be a key moment. Above $100, that really would, I think, send the oil price into the next phase higher. You can see that we've had this corrective phase of lower highs, lower lows. We're starting to build higher lows, and the potential above 99.50 would be a higher high. So that is a definition of a new trend, and we would see, I think, further gains. So this is a key moment for oil. How does it react around these levels now? And I really do look at this oil chart and think, well, it's starting to move higher. You can see the 4-hour chart. Let's zoom out one more level. You can see 45 to 50 area on the 4-hour RSI is where the buyers start to come back in. You've got that reaction high. So the reaction to the support now that comes in around 95.90. That's been tested on a few occasions in the last few days, held nicely. So that is a nice line of support above the uptrend. It's looking to develop into a new phase of uptrends, but it needs to continue breaking higher. 99.50 is that key resistance. Finally, onto the FTSE 100. Well, we've had this negative phase, and we've started to now build a new uptrend over the past 3 to 4 weeks now. It's still building and it is holding the uptrend. You can see this impressive improvement in the RSI now. FTSE 100 is breaking out. You saw that the Wall Street indices moving lower in recent days. We've seen FTSE holding on to that uptrend and moving higher. You can see this breakout. Effectively, this is a double bottom base pattern measured from the 7,100 area, you can imply an upside target of above 7,400 from that. So that is an initial target area. You can see if I put the crosshair on that resistance, you've got the reaction high that we saw back in sort of mid-late September, 7,335. That is the next real line of resistance. But holding on to this breakout area was important. So 7,100 area is a nice line of support now, 7080 to 7100 area, good line of support. But as I said, that uptrend is holding, momentum is positive. You can see that also backed on the 4-hour chart as well. Again, anything around that sort of 45 to 50 area on that 4-hour RSI is sort of being bought into at the moment. Uptrend intact, moving averages moving higher. It's all looking positive. So buying into weakness still happening on FTSE 100, and as I said, that 7,400 area is the target. So I wish you good luck in your trading, and I'll speak to you next week. Thank you very much.